Bill Gates, selling assets and plans for next pandemic 2025. Bill Gates has recently announced that he will be selling off his assets with the proceeds going toward the Bill and Melinda Gates Foundation. The Johns Hopkins Center for Health Security, in partnership with the World Health Organization and the Bill and Melinda Gates Foundation, conducted Catastrophic Contagion, a pandemic tabletop exercise at the Grand Challenges annual meeting in Brussels, Belgium, on October 23, 2022. The extraordinary group of participants consisted of 10 current and former health ministers and senior public health officials from Senegal, Rwanda, Nigeria, Angola, Liberia, Singapore, India, and Germany, as well as Bill Gates, co-chair of the Bill and Melinda Gates Foundation. The exercise simulated a series of WHO Emergency Health Advisory Board meetings addressing a fictional pandemic set in the near future. Participants grappled with how to respond to an epidemic located in one part of the world that then spread rapidly, becoming a pandemic with a higher fatality rate than COVID-19 and disproportionately affecting children and young people. A similar exercise was conducted by Gates in 2019 ahead of the COVID-19 pandemic. Participants were challenged to make urgent policy decisions with limited information in the face of uncertainty. Each problem and choice had severe health, economic, and social ramifications. Gates, well known for his philanthropic work in fighting diseases and at the forefront of planning and prepping for future pandemics, has been giving away his Microsoft stock or unloading a large number of shares. Gates has been notable for divesting stocks that he formerly owned. According to analysts, a hint of yet another potential market collapse is Gates' change in his investing strategy. Many experts have begun speculating that the world may be close to facing another great economic crisis, and he's trying to hedge against massive worldwide chaos brought on by a new virus that will kill vast portions of the population in a matter of months. Hi, and welcome back to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we start, make sure to like this video, subscribe, and click on the notification bell to stay updated with our videos. Now, let's get to the video proper. Even though Bill Gates is no longer in charge of Microsoft, his actions are still closely watched and studied by people worldwide, and some of his recent stock market activities have sparked attention. The notoriously visionary founder of Microsoft, who even wrote a book titled How to Prevent the Next Pandemic, is currently keeping an eye out for what the coming pandemic may be. We have just emerged from the most severe world crisis brought on by COVID-19 and its variants, and there is already speculation that within a few years, a new virus that Bill Gates has named SARS, or Severe Epidemic Enterovirus Respiratory Syndrome 2025, may cause a pandemic with similar traits. Similar to COVID-19, the virus will spread quickly, become a pandemic, have a similar fatality rate, and disproportionately impact children and the youth. Bill Gates has been selling his stocks in anticipation of one of the biggest economic catastrophes in history, which, according to research estimates, will result in the deaths of 20 million people, 15 million of them will be children. Despite being a renowned CEO, Gates excels in capital growth. Over the previous 20 years, Michael Larson, his fund manager, has assisted him in making $50 billion. In addition to making billions during bull markets, Gates and Larson also successfully predicted the dot-com boom and the 2008 financial crisis. He was able to increase his fortune and routinely outperform the S&P 500 thanks to his investment strategies. Now that one of the greatest recessions may be on the horizon, Gates and Larson are preparing. We are all aware of how difficult the economy is right now. Its defining characteristics are the Russian-Ukrainian war, rising debt levels, escalating inflation, poor consumer morale, and low consumer savings rates. In 2021, $1 trillion were injected into the economy, but in 2022, things went in the opposite direction. Since the federal government is taking away trillions of dollars from the economy, Gates is highly concerned about the Fed's artificial trap that it has set up for itself. There is currently a double-edged sword threatening the economy. The first edge is growing inflation, whereas the second edge is enormous government debt. The government now has two choices: destroy the US dollar or cause the economy to collapse, which might burst a debt bubble. The Fed has opted to slow the economy as opposed to the first option, which involves the possibility of an unprecedented collapse. Meanwhile, Meta hasn't been having its greatest days recently because its stock sharply declined. No matter which immediately comes to mind if someone asks you who is the wealthiest person in the globe, if you look at what percentage of the businesses they control and their capitalization, you can simply determine their net worth. With tremendous money, there is only one issue. You cannot instantaneously turn it into hard cash because it is simply on paper. Although it is technically conceivable, it is far more complex than you may think, since investors would lose faith in the company if they discovered the founder was selling off significantly. Compared to other computer billionaires, Bill Gates' wealth is more tangible, allowing him to convert $114 billion fortune into cash considerably more quickly than other billionaires like Jeff Bezos, Elon Musk, or Mark Zuckerberg. Contrary to popular belief, Gates' enormous fortune is not entirely attributable to Microsoft. While it's true that he initially made his wealth with Microsoft, the man rapidly diversified his portfolio. According to reports, Gates owns around $28.6 billion of Microsoft stock, slightly more than 1% of the company and 1.37% of his current portfolio. He holds 54 million shares in Berkshire Hathaway, a company with a market value of $11.2 billion, making it one of his largest investment assets. Berkshire Hathaway invests in a wide range of businesses as a holding company, including Apple, Bank of America, IBM, General Motors, and Goldman Sachs. Additionally, it controls entire corporations like Gecko and Duracell. Moreover, Gates owns 18.6 million shares in Waste Management Inc., which are worth almost $2 billion. However, there have been recent reports that Bill Gates has sold nearly $940 million worth of Canadian National Railway shares, decreasing one of the corporation's major holdings in the investment company that manages this entire personal wealth. He also sold all of his stock in the Mexican multimedia business Grupo Televisa. In the first quarter of 2022, the billionaire also completely disposed of Alphabet, despite the cloud and Google search companies experiencing rapid development. For the last 3 quarters, YouTube's ad income has fallen short of consensus estimates, and headwinds are likely to persist in the next one. During the pandemic, the share price dropped by more than 20%, hitting $2,978 in November 2021. It appears that Gates sold his shares at the ideal time. Approximately 50% of Microsoft was held by Gates before the business became public. When Microsoft was founded, he would have had a net worth of about $1 trillion or $1.5 trillion if he hadn't sold his stocks back then. When the pandemic was at its worst, its value was $3 trillion. However, he sold his Microsoft stock to put the money toward more reliable investments like real estate, land, and railroads. Who would have thought Microsoft would be so successful? As you may know, he hasn't been the only one to sell his stocks recently. One of the best times for tech stocks ever was during the pandemic. A worldwide pandemic is the biggest threat to human civilization, according to Bill Gates, who said as much in an interview with Vox 5 years before the outbreak. He has effectively forecasted how governments will react in such a crisis and have set himself up to profit from it. According to a report from whalewisdom.com, investors sold about 3 times as many shares as they had purchased during the first quarter of 2021. For the whole year, Mark Zuckerberg sold shares in Meta Platform Inc. almost every day. In 2021, Page and Brin sold over $1.8 billion and $1.7 billion in Alphabet Inc. stock, respectively, for the first time since 2017. Elon Musk, who is presently the richest person in the world, sold over $12.7 billion worth of Tesla stock, while Jeff Bezos, who is currently the 4th richest person in the world, sold more than $9 billion worth of Amazon shares. He even raised the question on Twitter, should I diversify my portfolio? According to the Bloomberg Billionaires Index, billionaires sold $42.9 billion worth of shares, more than double their $20.2 billion total from the previous years. Timing the market is nearly impossible due to the complexity of the factors that influence it. Who could have imagined that the S&P 500 would plunge by almost 300% as soon as the pandemic struck the US? The past 2 years, however, have been so exceptional that tech billionaires could not just continue to watch their stocks climb without making a profit. The only issue was that nobody knew when the Fed would decide to raise interest rates. In 2021, investors started to sell stocks as their concerns about inflation grew. By year's end, many investors had already liquidated their stocks, including Netflix, but the Fed continued to maintain its 0% interest rate for a short period of time. However, the Fed made it clear that it would bring inflation and the market to an end. Since then, anybody who has reservations about the future has been liquidating their stocks in order to prevent a further crash, which is precisely what happened. Even if the sell-off has primarily ended, stocks will likely to continue to decline for a little longer, especially if a recession is anticipated, since the Fed's officials predicted that interest rates would increase to 1.9% or about 3.4%. The Federal Reserve interest rate on November 2, 2022 is between 3.75% and 4.25%, which already exceeds that level. With interest rates rising, future cash flow has less value, which reduces the value of businesses, especially IT companies that plan to generate cash in the future. The Fed apparently aims to lower demand until it is equivalent to supply. Rising energy prices due to Russia's invasion of Ukraine and supply chain issues are two more reasons that impact inflation. So, it is still uncertain if raising interest rates can stop it. Some people disagree with the Fed's approach, believing that the focus should be on improving supply networks rather than destroying demand. It appears that we have reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed this video, and comment your thoughts below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you next time!